I really think Nvidia is quite attractive here, and there's a couple of reasons why. Well, let's take a look at the valuation first. The stock is trading in line with the SOX index now, and is trading at only a slight premium to the S&P 500. If you look at it historically, that's historically where the stock's bottomed on a valuation perspective. But more importantly, we have improving fundamentals from here. Gross margins for Nvidia should probably bottom in the April or the June quarter and improve to that mid 70% level as we head throughout the rest of the year. And then, and you look at the supply chain, things are actually looking really positive for Nvidia. So, Han Hai reported its February numbers this morning. They're the biggest, partner for Nvidia, and the February numbers were up 56% year over year in terms of revenue. And then if you look at the fundamentals of other parts of the supply chain, memory prices are starting to increase for both DRAM and NAND, both up mid-single digits off the bottom. And then finally, probably most importantly, if you look at NVIDIA's revenue growth from here, we're going to just keep seeing sequential acceleration. So I kind of put it together, and I like to set up in the stock.
Yeah, and we had that raid in Singapore where it turns out that the chips being sold to Singapore were finding their way in China. Do you think the administration here and what they could do with Nvidia further restricting chips, even perhaps the cheaper chips that they're allowed to sell to China right now, should that be a concern for investors at all?
Well, looking at the fundamentals, what's happened since DeepSeek, if you look what's actually happened since DeepSeek, is NVIDIA demand has gone through the roof, both in China and in the US, right? So if you look at the supply chain, H20s, those cheaper chips you were referencing, the demand for that has really surged since DeepSeek. And then if you look at what's happening in the US, Hopper pricing and all the pilots has gone up. So NVIDIA is clearly the biggest negotiating leverage tool that Donald Trump and the administration have with China. It's one of a few, and I think it'll probably be part of a grander bargain in terms of the China deal.
Dom, when you look at the companies that are doing all of this spending, and obviously the customers of Nvidia, like the cloud platforms, really interesting divergence in terms of how the market is treating them. You have Alphabet right now trading at a 10% discount to the S&P. Rarely seen that through history. Meta, on the other hand, has seemed like it's gotten it all figured out. Are there opportunities you see in those divergences, or how do you think about that group in general?
The issue with all the hyperscalers right now is that CapEx intensity has to continue to increase, right? And frankly speaking, NVIDIA is going to capture a lot of that economic value from that capital intensity increasing. I think the reason Alphabet struggled so much is really a function of its search business more than anything else, right? Just think about your personal day-to-day experience. How much more are you using ChatGPT and Perplexity relative to Google search? My gut is probably a lot. And so that search business is so big. And if you look last quarter, that grew 12% year over year. I'm not sure that search business can continue growing at 12%. So yes, I like YouTube. Yes, I like the cloud business, but it's really the search business that is under attack, which has historically been one of the best businesses of all time, frankly. And if you look at Microsoft and Amazon, all three of the hyperscalers were capacity constrained this quarter. They actually would have sold more in their cloud business if they had more chips from Nvidia. And I think that's partially the Blackwell delay, which should improve in Q1. And so of all those three, I personally think Amazon's the most attractive. We have a few different moving pieces for Amazon, but the most importantly, I think operating margins continue to improve throughout the year for Amazon.
Nvidia is really important to the market, and Christina Partsinevelos is really important to us, and so we welcome her in now. And I hope my microphone was muted.
Our audience is really important to me, which is why I'm actually going to start with Supermicro, something different for a change.
Well, by the way, worst stock in the S&P 500.
You're taking it right from, yep. So, because volatility is the name of the game, especially within chips and hardware. Supermicro, to your point, swung from the S&P 500's worst performer to its top performer overnight, pushing ahead with a new Silicon Valley facility. So they mentioned this a few days ago, and they're going to be building despite tariff challenges, lawsuit, DOJ, SEC probe, so a lot of volatility in that name. Taiwan Semi planning a massive $100 billion investment, but also could face even higher operating costs. They complained about this in the past, so that could squeeze margins, yet shares are up about 5% right now. Nvidia, to your point, its stock is on a wild ride, trading at a market multiple that almost matches the S&P 500. So when normally it should be trading at a premium because it's a growth company still. And that raises the question, is Nvidia undervalued? Some are saying yes, or is the market headed for a fall, for that market multiple to be lower? There's still a lot of regulatory risk for Nvidia, AI diffusion rules, restricting chip exports to certain countries that would come into play this May, the possibility of further China bans, specifically the H20s. We talked about that yesterday, but just it is a big portion of their business to China. And then switching to Intel, you can see shares, one of the few chip names down almost 5%, 5.5% after recent chip testing buzz with Ohio plant delays suggesting potential demand issues. So there was a note yesterday that Nvidia and Broadcom were testing Intel's advanced processes, and now you're seeing that sell off. But the most interesting trend on with that is investors are shifting, really. We're seeing this AI shift, which we see across the market, but traditional analog names like Texas Instrument, Analog Devices, those are holding steady if you look on a year-to-date basis, which is interesting for the chip sector.
Okay.
What do you want to go to?
Okay. I want to use your big knowledge brain about stock, because you're also at the NASDAQ all the time.
Correct.
Right? So you know the stock market, and you know Nvidia, and see how nice I am.
So nice.
So nice.
So nice. Let's praise you.
And that's a song, Fat Boy Slim, right? It's
Praise you like
I didn't ask for you to sing, I just want to mention the song. How important is Nvidia to the market? We said 546, I think it was the actual number, ETFs. Nvidia, in some ways, like almost is the stock.
Well, because it's weighted, right? So I think as of last year, the S&P 500, it was over 5%, or it accounted for 5.5% of S&P 500 return. So to your point, it is a big portion of the market. So when it does well, it goes with it. The AI trades also move in almost tandem with Nvidia as of late. So yes, it has an outsized weight on the markets.